What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be talking about Alibaba because they recently announced their earnings, and there are some very interesting things going on with the company when it comes to their earnings and their earnings growth, especially compared to what analysts are expecting. So what we're going to go over in this video is we're going to go over what was announced in earnings, and then we're going to take a look at how, if this trend continues, Alibaba's stock price is going to appreciate. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. This is a quote that I love by Benjamin Graham, and I think this is applying perfectly to the situation that we're seeing with Alibaba. So in the short run, the market is a voting machine, but in the long run, it is a weighing machine. Ultimately, what this means is that investors are voting on companies that they have a strong feeling towards in the short term. But in the long term, the one thing that ultimately matters is earnings. Companies that tend to earn more and see continued earnings growth are going to see continued stock appreciation. And personally, I think this is what's going on with Alibaba right now. I think they're stuck in a voting machine type of market, but over the long term, a weighing machine will kick in, and that is what is going to drive stock appreciation. We can see that for the fourth quarter of their fiscal year, they announced earnings of $1.56 per ADS, which is 20% higher than what Zacks analysts were expecting, and it is 35% higher year over year. And a lot of this growth is coming from margins increasing because they only saw a 2% increase in the revenue to $30.32 billion, which is compared to a Zacks estimate of $30.35 billion. Some of these other numbers are also important because they're talking about splitting up the business, but we can see that their China commerce, which makes up 65% of their total revenue, that actually fell 3% from a year ago, which honestly is not really that surprising. 3% one isn't a big number, but also they have seen all these lockdowns over the last year or so, which has really impacted the business. We did see really great numbers from the international commerce. That makes up 9% of their total revenues. This actually grew by 29% year over year. And here we can see some of their smaller segments. So their local customer services, which only makes up 6% of their total revenue, grew 17% year over year. Their logistics services, which makes up 7% of their total revenues, actually grew 18% year over year. And then their cloud computing, which is kind of sad, it makes up 9% of their total revenue, but it's down 2% year over year, which is honestly very surprising. Cloud computing overall is a very large growth factor, especially within China, and should be for Alibaba, and to see this number down 2% is a little bit concerning. In my opinion, Alibaba is trading at a ridiculously low valuation. It is trading currently, according to Yahoo Finance, at a 9.04. When I run the numbers based off their EPS announcement, we are sitting closer to a 9.7. But what I want to go over here next is how, if EPS continues to beat analyst expectations, how that will actually affect their PE ratio, and how if they are still trading at a 9 to 10 forward PE ratio in a year from now, how that could still result in growth in the stock price. Before we jump into that math, I want to point out two things here also on Yahoo Finance. So one is their earnings estimate for this current year. It's sitting at $8.62. So that is an important number. We'll use that here later on. The second thing that I want to point out is the surprise number here on Yahoo Finance. So basically, for the last 4 quarters, they show what the expectation was and then what Alibaba actually announced. And each time we can see that they are beating the number. Alibaba is beating analyst expectations by double digits. We have 12.5% here, we have 11%, we have 18.2%, and then we have 14.2%. So let's start over in this green area by looking at the earnings. So we have what Yahoo Finance estimated for earnings for this fiscal year at $8.62. And if we do a little bit of math, we basically take the price and divide it by the earnings, we get a PE ratio of 9.74. Now, however, analysts have been wrong when it comes to their estimates. We can clearly see that by how much Alibaba is beating by. And if we look at those numbers, they come out to somewhere around 15%. So when we do that, we basically take that number, the $8.62, and multiply it by 1.15. So adding 15% onto that number, that gets us to an earnings of $9.91, which would actually be a forward PE ratio of 8.47. And then if we do that and we say analysts could even be more wrong, they could be wrong by 20%, we get a number of $10.34 in earnings for this fiscal year, which results in a PE ratio of 8.12. So based off what analysts are currently expecting, we have the PE ratio of a 9.74. If we run a quick ratio on that, we can see that if we compare that to a 9.5, so basically saying that the market could trade down a little bit and Alibaba might trade at a 9.5 forward PE ratio, we would see the stock fall around 2.5%. So very limited downside in my opinion when we're looking at that number. However, if we say the market turns around, let's say the Fed starts dropping interest rates and all of a sudden people say Alibaba should realistically trade at a 15 forward P ratio, which in my opinion is still insanely low for a company like Alibaba, then the stock would trade all the way up to $129, which would be a 54% move up in the stock price. So then if we say that analysts are wrong on average by around 15%, we actually would get a current P ratio of 8.47. And if we compare that to a 9.5, which again is ridiculously low for a company like Alibaba, we would get 12% stock appreciation over the next year, and the stock would trade at $94.17. If we were, however, to see the stock trade up to a 15 forward P ratio, we would see it climb all the way to $148.70, which would be a 77% increase from the current stock price. And finally, if we say that analysts are wrong by around 20% on their EPS projections, we would actually be trading at a current P ratio of around 8.12. And again, if we see Alibaba trade up to a 9.5 to a 15 forward P ratio, we would see the stock range anywhere from $98.27 to $155.16, which would be a 17% return for the low end number or an 85% return for the high end number. So ultimately, the point of this video is that EPS growth is the most important thing when it comes to stock appreciation. When you're looking at what these analysts are expecting, and then you're seeing that they're missing on a lot of their expectations and Alibaba is actually beating on them, that provides a lot of catalyst for where the stock could be in the future. Because ultimately, at the end of the day, the market has decided as of right now that Alibaba should trade anywhere from a 9 to a 10 forward P ratio. However, if analysts are wrong about their numbers by 10 to 20%, we can see that there's a lot of potential for the stock to grow anywhere from 10 to 20% over the next year as it tries to keep up with that valuation. Obviously, if the market all of a sudden decides that the stock needs to trade at an 8 forward P ratio, then it won't have as much growth. But the reverse is also true. If the stock market decides that Alibaba is actually worth a 15 to 20 forward P ratio, we would see massive appreciation in the stock price over the next year. So these are all factors to keep in mind. In my opinion, Alibaba has a very limited downside, and that is the one thing that is most interesting about this company. I think there's a lot of potential to the upside, especially at the price that is trading right now, and a very limited downside. Again, keep in mind, that is all my opinion. Do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research, finding companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.